Ladies and gentlemen, good day and welcome to ITD Cementation Limited Q1 FY26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note this conference is being recorded. I now hand over the conference over to Mr. Mohit Kumar from ICICI Securities Limited. Thank you and over to you, sir.
Yes, thank you, Pari. Good afternoon. On behalf of ICICI Securities, I welcome you all to the Q1 FY26 earnings call of ITD Cementation India Limited. Today, we have with us from the management Mr. Jayanta Basu, Managing Director, Mr. Nitesh Sharma, the CFO, Mr. Rahul Agarwal, Lead Investor Relations. We will begin with the opening remarks from the management, followed by Q&A. Thank you and over to you, sir.
Yeah, thank you and very good afternoon, everyone. And thank you for joining us on the Q1 FY26 results con call. So before I begin, the discussion that we will have in this call may contain certain forward-looking statements about the company business prospects, which are subject to several risks and uncertainties, and actual results may differ materially from those in such statements. So I'll start with the financial performance for the quarter and subsequently followed by our MD, Mr. Jayanta Basu, who will be taking you through the operational performance of the company. So we are pleased to share that we have reported a very robust operational performance during the Q1 FY2025-26. The total operating income for Q1 FY26 stood at 2,542 crore, which is a 7% growth on year-on-year basis on the corresponding quarter. Similarly, the EBITDA stood at 254 crore in Q1 FY26 against 237 crore of the previous corresponding year quarter, again a growth of 7% reported. The EBITDA margin remained at a double-digit level of 10% in Q1. PAT of rupees 137 crore in Q1 FY26 against 100 crore, which again has a significant growth of 37% on year-on-year basis. The company remained deleveraged with a healthy net debt equity of 0.34x. And I'm pleased to announce that we also secured orders worth over 2,900 crore in Q1 FY26. In addition, we have also secured order worth 1,300 crore plus in July 25. That makes our total order book as on date to 4,300 crore in FY26 till date. We are also L1 in orders worth over 1,400 crores as on date as we speak. So now I would hand over the call to Mr. Jayanta Basu, who will take us through the operational performance. Thank you.
Yeah, thank you, Nitesh. Good afternoon and welcome for this Q1 conference call, FY25. The numbers are all known, so I don't want to repeat, but must say that again a good performance by our company during this last quarter, Q1, 2,500 crores of revenue and PAT around 5.4%, probably the highest in our company's history. And we believe that we'll be able to maintain the same momentum going forward. There are some significant, or I must say that some high points during this quarter in terms of execution and other aspect. Like for Chennai Metro, one of the projects, we have completed a particular section of tunnel. So TBM, we call it breakthrough. That is, TBM has completed his job. That is one good thing has happened. And we are working in Dahej, a very difficult conditions. As we know, those who are expert in this line, we are able to start the work on time, and the piling and foundation work is going on in full swing. We have completed one beautiful structure for High Court of Calcutta circuit bench. You will see that picture in our annual report coming soon. Bangladesh, despite of lot of issues, as you know, and having a different kind of job, we are doing excellently well. Uh, those who are in this line, they know that the size of the pile, we deal with around 50-60 ton weight, but there the pile weight is 300 ton. You can imagine the difference. The first time we are doing such a big pile, but it is being done very nicely. We are doing a lot of precast work. That means a lot of buildings nowadays are trained by the customer to shift to precast construction. And in Mundra, we have started doing that. It's a new technique, but we are able to do it properly, and work has got appreciation from the customer. I also very happy to say that our credit rating has been increased from A to A plus during this last quarter, which is also a good achievement. Now going forward, as I said last time, we have got good amount of job in pipeline. I mean, if I sum up, it will be around 87,000 to 90,000 crores of work which we are dealing with now. Some are in the tender stage, some pre-qualification, some we have submitted tender. So opportunities are quite okay. And good thing is that the number of job is not much. Though it is 90,000 crore, it will be hardly 15, 16 in terms of the number of projects. So that means that jobs are all big ticket job. We were again successful to secure a job in overseas condition in Abu Dhabi this last week or so, which we have been pursuing hard, and we are very happy to say that we got the LOI. In addition to that, as Ritesh has mentioned, if you put L1 all together, already have secured a 5,000 crore, around 5,000 crore of job. Either we have secured or L1. So that is something which is also very significant, because in first quarter itself securing 5,000 crore job, which has never happened before. If I go to the further detail of the performance, which I normally do in every con call, the few big jobs like Chennai Metro is around 55% we have completed. Bangalore Metro is verge of completion. Tibok Rangpo, always a difficult job, but we are able to overcome the difficult situation. Close to 80% job has been done already. Mumbai Metro is almost completed. Similarly, Ganga Expressway, as you know, is a big job, but we are able to complete the main carriageway on time. Finishing work is pending, so around 85% has been completed. Few marine jobs, I mean, there are a lot of marine jobs we are doing nowadays. Like Project Bharsha is a big job. I think we have done around 38%. Bangladesh, as I have mentioned, 42% has been done. LNG Petronet at Dahej, 25%. Colombo, another overseas job, around 80% we have done. And there are some new jobs also we have secured, like Ruwais at Abu Dhabi, just I mentioned, we are just starting. Bangalore, we have got a metro job. I mean, not metro, it's a metro rail, but from the different agency. We are just starting the job. Then we have got one port in Odisha from JSW, place called Jatadhari. That work is going to start. Vadavan port, all of you know that. We have got the first package. We are starting the job. Trivandrum airport, we have got a package. Jaipur airport, we got a package. And we got recently one building from Caventers, a multi-story building in Calcutta. In long and short, that is the story about the performance and the going forward. So I'll be very happy. We'll be very happy to answer the questions. So please go ahead. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditi Loharuka from CD Equisearch PVT Limited. Please go ahead.
Sir, how much has the industry tailwind supported the surge in your execution in the last few years?
Will you repeat it, ma'am?
How much has the industry tailwind supported the surge in your execution in the last few years?
I mean, I don't know whether I've got your question rightly. Industry tailwind means, yeah, I mean, there are a lot of opportunities and we have secured a lot of jobs. Market is good, and you know that we are looking for 8% GDP growth in our country, are emphasized by the government for the infrastructure. So all these things are, if you can say, the tailwind is helping us to get more revenue and more opportunities. Is it the right answer to your questions, if I have understood rightly?
Yes, sir, partially. Like, I just want to know that how much has the contribution of macroeconomic factors helped you in growing? Like, you yourself secure projects and you are continuing with the past projects. So how has the macroeconomic factors contributed in your growth?
Yeah, of course they are contributing because, see, business means you have to have the opportunity. There are so much of opportunity in India, not only by the government of India. There are from outsiders like investors from the overseas. So economic conditions also better now. One thing which I can very clearly tell you that the payments from the customers, in particularly government customers, are very good. So gone are the days when we used to wait for a long time. And the contractual terms and conditions are also getting more level filled conditions. So there are many factors which is really, you can say, the tailwind and macroeconomic factors are helping us.
Okay, and what sort of orders do you generally subcontract?
It depends upon the nature of work we do, but if you ask me, in general, around 20% to 30% is the range, present range we subcontract.
Okay, 20 to 30% is the range, but what type of orders do you subcontract?
Mostly, if it is not in our domain, like electromechanical work, HVAC, firefighting, those we rely on the specialist associates, so that we subcontract. Sometimes there is a large earth work where we have to source the earth from outside, that we subcontract. Sometimes some mining work like tunneling, there are good tunnel subcontractor we have, that also sometimes is subcontract. Yeah.
Okay. Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me? Hello.
I think there is some disturbance. Some other speakers are there. Can you just put it?
Yeah, 1 minute, sir. Can you hear me now?
Yeah, much better.
Sir, first of all, I just wanted to understand from the presentation, it has been shown that around current order book is around 18,820. So what will be the execution timeline for this?
18,880 will be executed in 1.5 years' time.
Okay, sir, 1.5 years time. And sir, with respect to your order books in pipeline, you mentioned that it's around 87,000 odd crores of orders are in pipeline. So what is your win rate in this, and how many of at what percent, like what's the element status amongst these projects?
Yeah, I'd like to correct you. 87,000 is not order in the pipeline. The opportunities are in pipeline.
Sure, okay. So what's the
And
current orders in
rate will be
pipeline?
around 20% if it is good. So you can say 16,000 crore. Just going by the statistics, it can be little
And
less or more.
okay, and what's the L1 out of this?
So far, I think we are L1 in 1,460 crores, and some order we have just received. So put together in this year, around 5,000 crores of order we have already secured, including the L1, if you consider.
Okay, sir. So my second question is with respect to the interest run rate. With the current upgrade in the credit rating as well as the 50 BPS cut in the interest rate, can we see this interest cost quarterly going down from 50 to 40 crores only, or will it stay at 50 crores?
Yeah, I think if you see the interest cost, it is a mix of many things. It is interest we pay to the bank. It is the interest we pay to the client for advance which secure. It is the interest or money we paid for the LC and bank guarantee. So in this, because of the credit rating gone up, definitely we'll get some leverage in the interest, the sum of this item. We have to see how it goes.
And so with respect to the guidance for FY2026, what is your revenue, how much revenue growth, and are you expecting, and will there be any improvement in margins going forward?
Well, revenue growth, as I have mentioned last time also, will be around 25%, between 25-20 in that range. And what was your second question? I just missed it.
Margins.
Margin, as you can see that it has been steadily, we are doing around 10% EBITDA range. But EBITDA is one parameter. But if you see your PAT, that has substantially improved with
Yes,
quarter
sir.
two. Yeah.
Sir, and my final question is with respect to the revenue recognition. So I just wanted to understand how does the revenue gets recognized. So when you bid for an order and you get an order, do you get any advance payment on those order, or is it like if you complete 15% of the particular order, then you will get 15% of the order value, like phase wise?
Well, see, one is advance. Advance payment depends upon the contract condition. Sometimes we get 5%, sometimes 10%. Some are with interest bearing, some with interest not bearing. That is one different subject. So revenue recognition, normally we wait for 10% of the work to be completed before we. That is a margin recognition. Yeah, but revenue we recognize from the start when we start.
So that is percentage of completion method basis is being adopted. The standard.
Okay, sir.
Yeah.
So these are two independent things. Advance is absolutely the contract term, and revenue recognition is the POCM method which is being applied.
Okay, sir. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Aditya Sahu from HDFC Securities. Please go ahead.
Hi, am I audible?
Yes.
Hi, sir. Thanks for the opportunity. I wanted to understand on the order inflow guidance for FY26, what are we expecting, and also how much of this are we expecting from group entities?
Look, we are expecting to get around total 15 to 16,000 crores of order in this year. Out of that, 4,000-5,000 already have secured. So that is, I think, pretty sure that we'll get this amount of order. And if you ask me, from there, group will be around. Just a moment, I'll tell you.
Sure.
Around 35% will be from the group out of that.
Got it, sir. Got it. And in the current, the existing order book, how much of that is from group entities?
20%.
20%.
Yeah.
Okay. Understood. And in the revenue and EBITDA guidance that you've given, 20-25% growth in revenue and EBITDA guidance of 10% for 26. Similarly, for 27, sort of, if you can go a bit further and help us on that, how much are we expecting that on the same lines for 27 also? 27, 28?
See, there are two things. One is you can plan for second year, third year, fourth year, fifth year, which we normally do. But giving some sort of idea, guideline is not correct because it depends upon many factors and most of the factors are not in our control. So let us wait for some time.
Understood, sir. Understood. On the execution front, you had highlighted in the last quarter that, the execution was, a bit impacted because in the Bangladesh, because of the political scenario over there. Like, has that situation normalized or are we, sort of facing an impact over there?
I think last time I have told that situation is under control. There was some stoppage of work in last year up to October, November or up to December. And thereafter we are working full swing. So there is no problem for us to execute there.
Understood. And on the net working capital, the working capital days, if you can help me with what is the net working capital days for the current quarter?
I think 130 days.
So we remained
29 days.
Net WC remained at 80 days.
80 days. Understood. Understood.
And it has improved quarters.
Pardon, sir?
It has improved from the previous quarters.
Right. We earlier had, I think, close to 100 days or less than 100 days that has improved. On the capex front, if you can, help us with the capex we are planning to do in 26 and how much have we done in, Q1.
Capex also depends upon few factors. Normally, it will be around this year. We try to make within 300 crores, 280, 290, 300 crores.
Understood.
But in first quarter itself, we have already spent around 89 crores. But it depends upon few work. If we get, then capex can be really high than this whatever I have told you. So which we are not able to disclose anything now. But otherwise, it will be around below 300 crores.
Understood. That's all questions I have. Thank you so much for answering.
Thank you. The next question is from the line of Janam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. So my first question is, how are you seeing the opportunities in the Middle East and what kind of work are you pursuing over there?
Middle East opportunity, one opportunity it has been converted to order, I have just mentioned. It is a marine work for ADNOC. ADNOC means Abu Dhabi Port. Like we have got Mumbai Port, they have got Abu Dhabi Port. To secure an order, a small order, not so big compared to overseas market. Thereafter, there is a sewer work, that is underground sewer pipeline, which is a big job in two packages. Two packages put together will be huge. So there we are having consortium partnerships with some of our Indian company and one Dubai-based company as well. So these two jobs we are pursuing very hard now.
Okay, sir. So my second question is, what is the status of other sets of tenders from Vadhavan Port, and are you seeing these opportunities in this year itself or in FY27?
Vadhavan Port, one we have got, as you know, that first job we have got. The second will be the breakwater and third will be the dredging and reclamation, and it will keep on coming. So breakwater job, I hope that tender may come anytime. It may come even tomorrow.
Okay, sir. So are you facing any labor shortage problems?
Labor shortage is a common problem. Look, we work in different segments. One is tunnel, one is marine, one is airport, and mining. We work in building as well, and road. So there are few segments which is labor-oriented job like building work. So there are crises, but as because we don't do much of building job, we don't have that much problem like other companies. But still, yes, we have got some issue with the labor issue of building jobs.
Okay, sir. So how are you mitigating that then?
How we are mitigating?
Yeah.
I think I have to sit with you for a whole day because it's a very short question. There is long answer, lot of options. First of all, you have to see that the labor forces, those who are working, they stay. Normally in Indian condition, if you require 500 laborers, in whole year you will find that you recruited at least 3,000 laborers, 5 times the turnaround. So why they go? You have to find the root cause and you have to sort it out. That's the first thing. Second thing is that try to mechanize as much as possible. In short, this is my answer.
Okay, sir. Sir, we currently have a book-to-bill of two times, and earlier in the last call, we had given a guidance for guidance for FY26 of 25% growth. So, sir, can you help me understand, like, how are you looking to accomplish this guidance?
Yeah, I still maintain 25% growth, but it cannot be so accurate. So 25 has a range, 20 to 25.
Okay, sir. That answers my question. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, please limit to 2 to 3 questions per participant and come back in the follow-up. The next question is from the line of Shreyansh Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is pertaining to, the orders which we are targeting from the parent. Can you quantify or, name a few contracts which we are, looking from the parent? And just in conjunction with that, are those, on a negotiated basis or, how does it work when it comes to the orders from the parent?
I think I have clarified this last time also. There is no negotiation. It is being done the way it was to be done before for last 15 years. The tender comes, we participate, and we get the job or we do not get the job. If we get the job, we get the job based on the lowest evaluated bidder. So those things are still continuing. The only difference is that earlier we used to be very choosy to participate in certain segments only. But now our parent or our group company, they have done so much of work in all the segments you name. So as because they are a parent, they are asking us, requesting us to participate more and more. So that is why the percentage of work from parent will be more, because we are going to the other segment as well. That's the only difference. Yeah.
And sir, can you name a few contracts, where we are under negotiation or, where tenders are invited from the parent?
I don't know. There are many, but is it? Yeah, I think same segments like marine, data center, airports, roads, tunnel, everywhere.
Okay, sure. So second is a bookkeeping question. What is the gross debt as on date?
It's 960 crores as on date. As on 30th of June, we have reported.
950 crores.
960 crores as reported on 30th of June.
Sorry, I missed it. 906.
960.
960. And cash?
So cash and excluding the earmark balances, we had close to 290 odd crores of cash balance.
Okay.
So the net debt,
sure.
so the net debt remains at 669 crores.
Got it.
Yeah.
Sure. And one last question from my side. So if you see, our order book has been building upon, and execution is also happening at a healthy pace, but margins largely have been, since last 8 to 10 quarters, are in the range of, say, anywhere between 9 to 9.5%. I'm talking about the core EBITDA margins. So is there any scope of improvement, at least by, say, 50 basis points or 100 basis points which can see going forward? The core EBITDA margins.
I know margin, you can say EBITDA margin or PBT or PAT, whatnot. But I personally, I rely more on the PAT, which takes care of everything. So I'll address PBT as EBITDA also. But PAT, if you see, it has increased quite gradually but steadily, like 3.6 to 3.8 to 4.5 to 5.4. And in our industry, 5% PAT, I think is okay. I mean, you can compare. EBITDA, yes, it has a factor of depreciations and all. We are all looking for 10% plus, which we are achieving now. And definitely we'll try to achieve more. Let us see.
Got it. Sure, sir. That's it from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah. Hi, sir. Sir, we have seen a sharp reduction in the interest cost for the quarter from 62 odd crores to 50 odd crores, despite the debt increasing on a QOQ basis. So what has led to the sharp fall?
Basically, as I told you, that interest has got 3-4 components. It is not only the bank interest, it is interest from the client on the advances, LC charges, bank guarantee charges. So those components are now a little bit less because most of the contract we are able to get interest-free advance through our hard negotiation and persuasion, and bank guarantee cost also has reduced. I think probably that has contributed to this improvement in interest cost.
Yeah, that has only largely.
So if the debt remains at similar levels in the next few quarters, so we can expect a similar interest cost around 50 odd crores, or there is a possibility of an increase?
So definitely there would be improvisation or optimization of the overall financing cost when we are doing post this Adani or the parental leverage which will happen. Okay. So that definitely in terms of absolute numbers also would come down, but we should see rather that as a percentage of revenue as the top line grows, and whereas we are able to manage the working capital efficiently, so as a percentage of the top line that definitely should come down over a period. Yeah.
Okay, and what is our average borrowing rate as of now?
So that's in the range of 10 to 10.5%, yeah, on the working capital lines. Plus, there are other components. We have a larger portion which is earmarked for the non-fund based limits, largely for the LCs and the bank guarantees which we have been issuing. So that contributes a larger portion of the interest and finance cost.
And so what would be our limits and how much they have been utilized, both fund based and non-fund based?
So that all put together, we have close to 6,000 crores of limits available, and almost like 90% is being utilized today.
Okay, and sir, what would be our mobilization advance as of June?
So that stands at 830 odd crores as on 30th of June 2025. 835 crores to be precise.
And out of this, what would be ballpark interest bearing?
Almost 80% is non-interest bearing, so 20% is like interest bearing, in the range of that.
Okay, and sir, lastly, what would be our total receivables and as of June, and of that, what would be from Bangladesh?
Bangladesh, I can say Bangladesh there is no receivable because we have been paid on time and advance already have got payment. Total receivable, Nitesh?
So total receivable stood, the total receivable was like 1,600 odd crores, and in terms of, you say, the number of days, it is like 64 days average, which is what we have been maintaining.
Okay, so for the quarter, we have seen 7 crore of share of profit from joint ventures. So what led to this sharp rise?
That is for the Mumbai Metro. Mumbai Metro is getting completed. So They have
So
released that amount.
incrementally, this should be a marginal number.
Yeah, because you almost completed now. We have taken margin before also. So, yeah.
So largely, it should be done now in terms of booking the profitability.
Yeah, I think that the work is completed. We may get something little bit more, but nothing significant going forward.
And tax rate for the quarter was 17%. So, why it was so low, and how do you see it going forward?
So, we had a tax-free income from one of our JV, which had carry forward loss into it. So that has bring down the effective tax rate for the company.
So it should be only for this quarter, right? Incrementally, it should be a normalized rate.
Yes. Yeah. So effective tax rate would be in the same range. This is just a quarter, this month reporting. I mean, this quarter reporting.
Okay. Thank you, sir. Those are my questions.
Thank you.
Thank you. The next question is from the line of Ishita Lodha from Swan Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is that in the order pipeline of 90,000 crores, how much is from the parent company?
Around 30 to 33%.
Okay. And do we have any slow-moving orders in our order book?
Slow moving. As far as no, I don't think. I think no, nothing significant. No.
Okay. And this orders that we have received, 5,600 so far. So this is also largely from the parent?
No. These are largely from the outsider. Parent will be around 1,000 crores.
Yes. Yeah.
Balance 4,000 crores from the outside.
Okay. Thank you. That's it from my side. All the best.
Thank you.
Thank you. The next question is from the line of Shreyansh Gathani from SG Securities. Please go ahead.
Hi, good afternoon, sir. I had a couple of questions. The first one was you mentioned that the ticket size for the opportunity that you have is going to be much bigger. So just trying to understand what kind of how do we look at the ticket size versus margins, or is that the order size is agnostic, like the margins are agnostic of the order size that we pick up? Usually, like bigger orders, we see some kind of efficiencies that are built in. So just trying to get a sense on that.
Well, bigger order, if you convert to, bigger opportunity if you convert to order, then your revenue goes up. And if your revenue goes up, then naturally it has got some positive contribution to the margin. That is generally speaking, so that helps. Number two, the big ticket job, you get less competition. So it is not like a NHI job where 26 participants are fighting with each other. There will be hardly 2-3 companies. Naturally, everybody will try to get their best. So competition is less. And most important part is that you are able to get qualified for this big ticket job. So that is another significant thing. And another thing that if you have 60 projects to handle, and if your revenue is 10,000 crores, and if you have 30 projects to handle, revenue is 15,000 crores, the second is much better option to run more efficiently. So these are the few factors which help.
Got it. That's very helpful. So is it fair to understand that going forward we would aim for, like historically, the kind of order sizes that we've got, we want to go into like a bigger level of orders that we actually intake now?
Yes, of course.
Okay. So is that are we getting out of some smaller ticket jobs, or is that continuing, and we are just focusing on the larger jobs now?
We don't have so-called smaller jobs now. Once upon a time, we used to do job of 20, 30, 50, 40 crores. Now there are hardly any job which is less than 300 or 500 crores. We are slowly getting out of that. That's what I say, that we are getting qualified also to get the big jobs.
Got it. So last question. So you've already done 5,000 crore, and even in the last con call you mentioned that you're looking at 15,000 crore for a 90,000 crore opportunity. So is there a possibility that we actually get more than 15,000 crore given we are ahead of the run rate, or is that not a fair assumption?
I don't want to increase every quarter, so let us be happy with 15,000 crores. We'll be able to achieve that.
Got it. Thank you. That's all from my end.
Thank you.
Thank you. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. So I heard labor shortages in the industry itself, which delayed project executions. I just want to understand margins perspective, because we have seen some of the companies witnessed margin erosion in this quarter, but we almost maintaining the same levels. I just want to understand about maritime, urban infra and industrial buildings, how the margins are differentiating, and is there any inflation risk, right? Steel, cement, and any other things are impacting on the margin side? And you can share the breakup of fixed price contracts and variable contracts also. And you can throw some light on that, how domestic and international projects are differentiating in terms of margin and the execution side.
Okay, so I'll start with your last one. Normally, international jobs gives you better margin, because international means they are international players. They work in a high price scenario model. Number one. Number two, the terms and conditions are very friendly. Not friendly. They are, level field terms and conditions. International job, provided you access it properly, you know the job properly. Otherwise, international job can be killer, because their quality standards, safety standards are very high. And the location also, sometimes if you go to Africa, some country can get a hit there. So for assessment of the location and the project is good, and if you get the job, if you can deliver, international projects normally fetch you better margin. That is number one. Number two, in terms of the variable contract and fixed contract, I think most of the contracts are now variable. Exactly, I cannot tell you the ratio. It will be around 70-30%. 30% are fixed, 20% is variable. In variable. In terms of the commodity prices are now more or less steady for last few quarters. We don't see much surge in that. But I don't know what may happen in future. The labor is an issue, and there are companies, those who rely most on the labor-oriented work, they are getting hit. We are also not exceptional to that. Now for segment like building, we are suffering because of labor force not available, and because of that delay, that is what they are. Trying our best to mitigate that in different ways.
Management was like, we are not aware what happened next quarter. Then whenever it will happen,
We may request participants to please mute their handset while the management is answering your question.
Yeah, okay.
So long answer. I think you have got your anything else if you want to discuss.
As there is no response, we move to the next question.
Yeah.
The next question is from the line of Rehan Syed from Trinetra Asset Managers. Please go ahead.
Oh, yeah, good afternoon to the team, and thank you for giving me the opportunity. Sir, I want just a brief understanding regarding the growth that you have shown in the press release. The press release highlights strong growth, but execution remains critical. Are there any cost escalation risks due to raw material upfront transferring or overseas projects that are seeing right now? Or also, it could impact margins in the coming quarters? Just put some light on it.
Raw material price, I have just mentioned that I don't think it's affecting significantly to us. There are two reasons behind that. First of all, that I don't see much surge in raw material price. At the same time, we are able to negotiate with the customer to have a fixed raw material price entered into the contract. That means if the price increases, we are getting compensated, vice versa. So this is all about raw material price risk. Quarter 2, okay, always quarter 2 is lower than quarter 1, as you can see from all the companies. We are not exceptional. So quarter 2 will be a little bit muted because of monsoon effect.
Okay. And sir, like that you have passed previously mentioned, the margins you are sure for FY26 and FY27. So like, is there any affect our margins for coming quarters or whole year that should be aware of?
I mean, the EBITDA, as I mentioned, that around 10% will be maintained. We'll try to maintain. Is there anything specific you want to know? I couldn't got your question.
Like, you got my question or you didn't got my question?
No. I mean, what is your what you want to know? That margin.
Okay. I'm just clarifying that. Is there any risk or any uncertainties we have to expect in coming quarters for affecting our margins for going forward?
Yeah. I got it. Sorry, I got it now. Risk. A political risk in the overseas country is always there. Like when we started Colombo, we had some problem. We have started Bangladesh. If Bangladesh goes smooth, I don't see there is any other risk we have which can affect the margin.
Okay. So on my next question is regarding during quarter one, cementation become a part of Adani Group. So could you provide some insights into the strategic benefits of this transition? Specifically, will this open up new project opportunities or improve access to financing and bidding strength?
Well, the basic idea is to grow, and the emphasis is given a lot on the growth path, as because Adani as a group have got plenty of jobs to be done, and earlier we used to do only marine, but now we are getting into the other segments also, like airports, data center. The emphasis has been given to build up our strength in that segment to improve our capability, so that we can do more job in that segment through Adani.
Okay, sir. Thank you. That's it from my side. And good luck for your coming quarter.
Thank you.
Thank you. The next question is from the line of Jay Shah from OHM Portfolio Equi Research. Please go ahead.
Hello, sir. Thanks for the opportunity. Am I audible clearly?
Yes, sir. Yes, you are audible.
Okay. I want to go back to the EBITDA question that people have raised. How do we read it? Because if you double your turnover every year, every second or third year that you have done, then if your gross margins are same, the operating leverage should have helped you to have higher EBITDA. So are you bidding at slightly lower gross margins and getting better payment terms because we have seen improvement in working capital? Or is the mix of jobs responsible that the overall average EBITDA still remains at 10%? Because what we can't understand is that doubling of growth is not helping you in terms of operating leverage.
Well, there are many things in that. Okay. You know that we had some bad projects a few years back, like Bangalore Metro and Delhi Metro. And so those projects are gone now, behind us, and that is why you can see that EBITDA, which used to be around 9% or 8.8 to 9%, has finally gone to 10% consistently during last 3-4 quarters. So that is an improvement. And I strongly believe that if you do not have such one-off bad job, EBITDA will further increase. So let us see.
Okay, but at bidding level, you are bidding at the same margins as you were bidding before, despite higher capability, or are you able to pick and choose the contracts at higher margins now? If I look at your order book, will they be at higher margins than what you have done till now?
Well, I mean, see, we cannot be the chooser. It depends upon the market. What we do now that we definitely find some job which is interesting, which will make good margin. We try to get the job. So there is no pattern that earlier we used to do 8% margin. Now we are bidding for 12% margin. Not like that. But one thing is there. Let me complete that. As I have just said that we are trying to get bigger jobs, but the competitions are less. There probably we will be able to make little bit better margin while we tender.
Okay. So in a way, you are giving the benefit of the operating leverage to the customers and trying to get more orders. Is that the way to understand?
It's a matter of balance. I mean, both sides. Sometimes we put better margin, we get the job. Sometimes we have to get the job. That's why we put little bit less margin. So both are there.
Right. And, whilst I'm not asking you for guidance for FY27-28, post Adani's acquisition and the fact that, you have a parent which can give you captive jobs, is the organization geared up to maintain such growth rate in terms of planning? Like we are trying to understand what is the peak capacity of ITD or what could be a constraint. If you keep growing at 25% per annum.
Yeah. We have got enough capacity, as we have demonstrated, just for your sake of consumption, that we have grown, as you know, 3,000 to 5,000, 5,000 to 7,000, 7 to almost 9,000 plus, with almost same kind of resources in terms of the manpower and even machinery also. So the core thing is that if you have the knowledge, the core team, if it is with you, then it is not a big problem, because plant and machinery you can buy. They are available now in plenty, and we can get support from Adani Group also. What is required is our knowledge. Knowledge we have, so I don't see that's much of a challenge.
Okay. And in terms of mix of jobs, are margins same or are they different? Even if you can just rank them in terms of what is most profitable and what is least profitable, without giving the percentages.
Yeah. I mean, it cannot be same, because different segment has got different this thing. If you ask me in that way, that top will come underground metro in terms of margin, better margin, then marine, then specialized job like foundation oriented job, then roads and building. It goes in that pattern.
And airports and ports you would include in? Ports would be marine?
Marine is port. Airport will come in between. Airport also has got different scenarios. Some airports are 400 crores, some are 5,000 crores. So if you go for 400 crore job, you have to put a very low price, which is not viable. But big airports, yes, you can make better margin.
Okay. Thank you very much, and sir, best of wishes.
Thank you.
Thank you. The next question is from the line of Amit Agicha from HG Hava. Please go ahead.
Yeah. Good morning, sir. Thank you for the opportunity. Sir, am I audible?
Yes, you are audible.
So my question was connected to is our company looking for interlinking of the river project, like it's a big opportunity?
Which project you mentioned?
Interlinking of rivers in India.
Interlinking rivers in India is a thought which is we are there for last 15-20 years through inland water transport. So we have to see that whether really it happens. If it happens, if it is size is good, definitely will be interested, because it is a kind of marine job which we are very good in that. But we need to see the opportunity in a perspective of when it is happening, what is the feasibility, etc.
Well, till now the company is not doing, right?
I don't see much. You tell me any project of such kind of interlinkings of happening now. I don't see.
In MP, I think so in MP, Rajasthan, Maharashtra, I think so they have started picking up.
Yeah, I mean, it is in plan. I mean, it is in plan. The whole India, there's a lot of plan, but when it will happen, if it happens, then that will depend upon the size of the project. We'll choose whether it is okay or not.
Okay, thank you and all the best for the future.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to management for closing comments.
Thank you for the questions, and we are very happy that you have got interest on us. Please rely and keep on keeping interest on this company. Thank you very much.
Thank you. On behalf of ICICI Securities concludes this conference. Thank you for joining us and you may disconnect your line.